I want to welcome all of you to another series of trading with Currency Meter. Today we will be talking about support and resistance levels. The tools that we offer, they are there to make your life easier, to find things for you, but at the same time it requires you to think before you take a trade. So today I will talk about support and resistance because I think this is one of the most powerful tools. If you understand how it works, you can use it in connection with the tool that we provide for you to have success in the Forex market. Whether you trade stock, bond, commodity, futures, or options, you have to apply the same type of knowledge and understanding before taking a trade. So we will be talking about support and resistance today. Support basically is an area on the chart with potential buying pressure. What that means is that you have buyers and sellers that are fighting. One of them has to be the winner, because if both of them are fighting the same level, that's where you find the market is going sideways. So it's not moving up or down, it just trapped in that loop or trapped in that long line. You can see that on the chart where the market is seem to be going sideways. They call it sideways market, right? In order for you to have support and resistance, then you will have this dynamic fight or a toggle war between the buyers and the sellers, and they will create those areas. So support is an area on the chart with potential buying pressure, which means you have more buyers that are trying to push the market to the upside. And when that happened, it creates something we call support. Most people have the idea, they think that the support levels or those levels in the charts are created by the indicators. No, they're not. They're created by human beings just like you and me. We are people that are buying and selling in the market. Our behavior dictates what you see on the chart. Once you understand that concept, so you know these are people trying to influence the market by pushing it up or down in this way. So in other words, when you have a support level, it means that the buyers are pushing the price higher. So the buyers are trying to push the price to a level higher than where it is right now. Or they refuse the lower price. They don't want to go lower. They want the price to go up. Now I'm going to show you this chart so that you can have an idea and you can see quickly where some support levels that I just drawn. Okay. Now if you look here, you see that the price comes down and is stuck in that level. It comes down one more time and it stopped at that level here. Now, again, one thing I want you guys to understand is that a support is not a number. It is an area. It is a wedge between certain point. It cannot be one specific number. It can be anywhere from 10 to 15 pips up and down. It doesn't matter, but it is an area. Sometimes, especially in stocks, the price can come down and specifically stop at a price. Yes, that happens. But I want you to keep in mind that the area of support is not a specific number, is a range of area. And you can see again, the price tried to break down to the support line and it couldn't, so the price went up. Now I want to show you something again. When you get right here, you see you have another level of support. See it many times that the price comes down and then there's a support right here. And you can draw a line here, and you can draw a line down here, and the middle part here is the area of support. All right, it's an area of support. So that's what support basically is. The resistance level is an area on the chart with potential selling pressure. In other words, there are more sellers than buyers that are trying to push this price down. Okay, so the sellers they have a toggle war with the buyers and they are trying to push the price down. In that instance, as a Forex trader, your goal is trying to sell the market. Here is an example of a resistance level. You see, the price goes up and trying to break up this level and couldn't, and he tried many times, as you can see. Right? So this is not a coincidence. It happens for a reason. There are many places where this could have stopped, but it stopped right there many times. You see how many times the buyer trying to push the price up and the seller say no, they push it down. So this is what we call a resistance level. And I'm going to show you sometimes how resistance level can turn into a support later on, as you can see in this case. You see there was a resistance here, and here you have the support level created because the sellers or the buyers, remember what happened, and there's so many sellers here, so many buyers and the sellers. So here the buyers, they push it back up. Okay? So that's basically resistance level. Now that you know what support and resistance levels are, let's find out what are the trading applications. How can we use that information in trading? So now when you trade, you're looking at the support levels and the resistance level. You need to make a decision when you get to that point. What do you do when you are at the support level, and what do you do when you are at the resistance level? So at the support level, what we're trying to do is to buy the bounce and sell the breakout. What I'm saying by that, buy the bounce and sell the breakout. Buy the bounce means that the price will get to that level of support. It comes down, you reach the support level, and there's a decision that's going to be made. If you have more selling pressure, the price will break the support level to the downside. And once that happens, you can go ahead and sell that trade, because at that moment, the price just break that support level. There is no support anymore. Now it's time for you to sell. But if the price bounce from that support level and usually create a new candles and close that candle above the support level, at that point you need to buy because the price wasn't successful in breaking to the downside. Now that's what we call bounce. Bounce is when the price comes to that level, try to break it and couldn't, and reverse back to where it come from, to the upside. Now in the support level, you buy the bounce. And if the price break that support level and goes down, that is a breakout, and you need to sell it. At resistance level is the reverse of what just happened at the support level. At the resistance level, we are trying to sell the bounce and buy the breakout. Okay? So basically the price reached the level of resistance level. And then what happened is the sellers now is in a tug of war with the buyers. The seller pushed the price to the bottom. The price come up to the resistance level and couldn't break it to the upside. So the price will be bounced. And what you will see most of the time is a candle, is a bear or red candle, whatever color you assign to your candles, is a bear candle that will be closed below the resistance level. Below the resistance level, there will be a candle created, and then you can go ahead and sell it because the price couldn't move higher. And the reverse could happen where the buyer pushed the price to the upside, break out from the resistance level, and then you can go ahead and buy the breakout. I'm going to show you a few examples. As you can see, this chart shows you different levels where you can draw lines for support and resistance. You can quickly look at the chart and you can see all the levels where you can buy or sell euro yen. I'm looking at the daily chart here. Okay? So in the daily chart, what you see many places where price fight but couldn't break it to the downside. This one is a support level right here. This is another support. This here is another support area. Okay? All these are support areas. Now the resistance levels are those. These are resistance level. You will draw a line here to show you the support level. As you can see, I'm going across what you see happen. Boom. Here we go. The area that was support before become the resistance level as you move in the future. Okay? Here, the price come down here. Here, the price break this level, and it goes down. It goes down. Then it come here, and the price stop, create a support level, and goes up. As the price moving up, remember in the past you had this level. That was a support level. Then the price, when you get to that level, you need to always watch to see where the price stop. The price stop here, take a break, couldn't push up because remember there's a resistance level here. Just because the price already passed doesn't mean the resistance level is not there, because you still have positions at that level. You still have people who trade here, maybe who hasn't get out of the trade or still in the trade that are still here, and that will remember that level. So the price get to that level, it bounce from that level, which is resistance level, and it drop down. Okay? It drop down. When you get here again, you create another one. But again, if you draw a line here, you can see, right here, there's the level. Price goes down, create a toggle wall between buy and sell, and create a nice support level. Then the price went back up. Now, as it went back up again, remember you had a past support that was here. Here it is. What you have? You have again another resistance level that is created from the past support level. So support will become resistance in the future. That's the dynamic you need to think as you trade. You cannot just trade blindly. You have to look at the chart. The chart is telling a story. It's telling you there are past levels that you need to keep in mind that can happen again. Because those levels, remember, people are trading. People hold trades. Because they hold trades, they hold positions, those positions still there and people are managing them. Someone who sold here and went up, maybe didn't have a stop loss. Now they're waiting for the price to come down, and that creates some kind of a dynamic between buying and selling pressures. And as you can see, we can move forward and see all that. Support become resistance, and resistance becomes support. Back and forth, back and forth. You always have to look at those levels to see them and make a decision based on that. You cannot trade in the blind. Now let's find out how we can put this in connection with the currency meter. As you know, the currency meter will send you alerts and will tell you, or you will see it on the chart, what pair is going up and what currency is going down. Let's say that you have all your euro aligned to go up, and you have all your yen aligned to go down. So now you have a nice euro-yen pair that you can buy because all the euros are going up and all the yens are going down. So basically, you need to buy euro versus yen. But here we go. You go ahead and place a trade, and all of a sudden, instead of the price going up, the prices went down. Well, what happened? It doesn't mean the meter didn't tell you the right information. Yes, it's give you the right information because you remember there was a buying pressure on the euro to push the price up. But then, as it get up, you reach a level of a resistance level. Now, on that resistance, unlucky for you, you receive that alert at the moment where the price reached the resistance level. In that case, you should have sold the bounce instead of buying the breakout because the price didn't break out of the chart. Then you take a loss on that scenario. Okay, so that's the reason why you have to make sure you understand what's happening before taking a trade. I hope this can help you.